Welcome back to ICT Trading Concept. How are you all? I'm fine. I'm fine. I guess everyone's weekend was very nice. We're going further. Microphone testing. Okay, 1, 2, 3, 4. If you can hear me, please let me know that before starting. Okay, just write it down that you can hear me. Quick check. Voice is clear, or if there is any issue, let me know faster because I'm gonna explain something which is going to miss. I mean, most of the people is going to miss that. Okay, then later they won't rewatch the streaming and they will miss it. Just let me know that if you can hear me, voice is okay or something. There is any issues, everything okay. Just let me know that. Okay, thank you, AAFX brother. I will talk about everything later, but before that, I would love to talk about the breaker block. Okay, the reason is there is little people, and I really love to explain this thing with a small portion of the people who are actually, I mean, who love to maintain the timetable. This is for them. Suprabhat bhai and Nadeems. It's evening over here, okay? So good evening, brother. So let's go about the breaker block, okay? The thing is, all of we know what is breaker block. Breaker block is between two low, the highest up close candle is the breaker block. So this low and that low, the highest up close candle is the breaker block. When market will go above that high and it will come back again to that high, it will go higher if you have the buy side liquidity. So this is actually the breaker block, and I guess most of the people know about this breaker block. The most important question is where you will look for the breaker block. Okay, now I'm gonna explain this thing with this small portion of the price action. First, I'll be here. Okay, market has taken some liquidity around that area, so I'll just mark the liquidity. It has taken some liquidity here, and I got the market structure shift here. Okay, so I'm gonna mark the market structure shift. This is our well-known setup. The first parallel gap over here is the first parallel gap. I'm just gonna mark it faster, okay, because I really don't want to share this thing with more people as most of the people are lazy. So whoever actually joined at the beginning, they will just get this point. Otherwise, rest of all will miss it. Okay. So this is our well-known setup. Market has taken the liquidity, market structure shift. This is the first parallel gap. This is the breakaway gap. Price will come here and it will go for the liquidity. Now, when it tap to this first parallel gap, now I will look for the order block. Okay. First, this is the setup. Now market went lower. I will look for the lowest body close candle. Okay, the lowest candle which will be my order block. So this is the order block. Now this is the consecutive order block. Sometimes market come until the lowest candle. Sometimes market I mean respect the consecutive order block. That means if there is a series of candle, then that will be your consecutive order block. I'm gonna mark the order block here as well. As market came here to this order block area, I'm gonna remove this order block. I will go over here, and the word is order block. Okay, so please don't get confused about my pronunciation. When market trade the parallel gap, then I will wait for the order block entry. Okay, market came here. After trading the order block, I will look for an area that will be unfilled. So this is that area which should be unfilled. Market actually should left that area unfilled. Okay, so I'm gonna mark it. So this area will be unfilled. If you just uh, look at this area, this is the unfilled area. Okay, now market went higher. It should take the liquidity. If it failed to take the liquidity, instead of that, if it makes another level of the liquidity and went lower, in that case I can see it has made this liquidity, buy side liquidity. Okay, so this is that buy. Don't think there is this is the price action. Market is not over there, something like this. So market came here, and, and so market came here. It has made relatively equal highs. If you don't go with that, just go with this. Okay, this high and that high, they are relatively equal highs. Above this relatively equal highs, this is the last fair lookup from 15-minute chart. So I am actually marking the highest high with all of this thinking in my mind. If market fail to take the liquidity, where is my liquidity? Here is my liquidity. Maximum liquidity is over here, or the 15-minute fair value gap is over here. So market has to reach either the liquidity or the imbalance. Any of this level, market has to go. Okay, has to reach over there from this setup. Market failed to reach to a certain level. Instead of that, it went lower. When it is going lower, I will look for this area. This small portion of the area I am looking for. Why? If market can fully trade that area, then I will look for the breaker block. Okay. This is the place where the breaker block actually created. This the breaker block creates here. So you can look for the breaker block here or here. There is no breaker block. The breaker block is here. If I go little bit, so market was just doing this, and 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 just let me go a little, and okay. So here, see, this area is now filled. Okay, when it is filled by that candle, I will look for a breaker block. What is breaker block? Low, market went lower, high, lower low. Okay, next time, this time, this swing low, it tried to go below that low, but it failed. If it could go below that low, if it come below that low, then this will be my breaker block. As market failed to go below that low, then I will use this low and that low. Between these two low, I will look for the highest up close body candle. Let's go to that candle. This is that highest up close body candle. This is my breaker block. Okay, sorry, like this is my breaker block. Now I got my breaker block. This is my buy side liquidity or the last 15-minute fair value gap. If market can come back here to this breaker block, I have to take the entry when this high is broken. Okay, broken means body close above that high. It valid as a breaker block. You don't need to look for the fair value gap here. Okay, you because there is more probability that market will trade this breaker block, then it will go higher. Just remember the sequence: liquidity taken, market structure shift, either the well-known setup or the 22 YT model. There is nothing wrong. Okay, but it has to trade the fair value gap, then it has to trade the order block. After trading the order block, there should be some portion that will be open. So this is that open portion. Market went lower, filled that area. I will look for the breaker block here now. See, okay. So this candle, look, this candle tap to the breaker. You have to take your entry here. Your stop loss will be below the breaker block. You have to cover little bit because sometimes market went lower and make a create, it creates a mohawk. That means a very little wick go outside of the breaker block. Just very little wick. It can go outside of the breaker block. So you have to be careful about that. Now, where should be your target? You can look for this buy side liquidity. Here, this this is relatively equal highs, or you can go until the last 15-minute fair value gap. This is the last 15-minute fair value gap. At the same time, you have to take the partial. Okay, even if you target for the maximum, then you have to take some partial around that area because this is most obvious liquidity. So that should be your partial. Okay, so that should be your partial, and you can hold it until the last fair value gap low. Let's see how price react. So price went higher a little bit, and okay, so that is your breaker block entry. Now if you miss this fair value gap entry, you are not sure after this big run. Look, market fall, retrace, fall. So you were not sure that should I go for that entry? Is it actually retracement for more lower, or it is going higher? So you didn't take your entry to that fair value gap. Okay. Instead of that, you you didn't take that on, and then you have missed the order block entry as well. You have missed both of them. Now you are expecting price will reach to this 15-minute last fair value gap. Let me go to the 15-minute chart. Okay. So this is the 15-minute fair value gap. I'm talking about this fair value gap. This is the 15-minute fair value gap. So you are expecting price will reach to that 15-minute fair value gap here. It will reach to that fair value gap. You have already missed all of this entry opportunity. Then suddenly you notice, okay, market didn't trade that fair value gap. Instead of that, it started to fall. When it is falling, you have to look for this fair value gap. This fair value gap is important. Okay, this is how I use the fair value gap. If you are alone, you are trading, you will notice this. But if you there is 100 people in front of you just waiting for an entry, then this is very difficult to identify. But at the beginning it will be little difficult, but trust me, in time you will get this in time. Okay, if you see market has traded this fair value gap fully, okay, it has to be closed by the body. This fair value gap has to be closed by the body. If it happens by closed by the body, then you will look for a breaker block, low, high, lower, low, and vice versa. Okay, high, low, higher, high. If market is actually going lower, then in that case you will just look for vice versa entry. The highest body close candle will be your breaker when you will take your entry. The candle will break the breaker block. See, this candle has broken this breaker block. Now it is valid as a breaker block. Market come back again. But brother, if it doesn't reach over here, I actually love to take close approximately entry. I don't wait to reach until the breaker block. Either I try to take entry around that area when market is going to break that breaker block, or when market come here very near to the breaker block, I love to take my entry. Okay. But if as you are new and this is your beginning, wait for the perfection. Okay. Market come here, tap, take your entry. Don't go for maximum stop loss. But if I get stopped out, market went lower and stopped me out, then if it go higher, don't get panic with that. Stop out, nothing. Okay, it doesn't matter. If you got stopped out and still you see market went higher, that means you got an experience that okay, this thing is actually working. So it will make you more confident about the setup. Try to understand the feeling. The whatever I'm trying to give you, try to understand this. So this is one setup I have given you from 1 minute chart. Okay, now I will give you another setup. I will show you the same thing, okay, from the higher time frame now. So this is 15-minute chart. Close this one. So this is 15-minute chart. Okay, price went lower. It has taken the liquidity from here. Okay, this is liquidity taken here. Market has taken the liquidity. At the same time, it tapped to this last 15-minute fair value gap. This is 15-minute 15-minute chart. So market has tapped to this 15-minute fair value gap. This is the 15-minute fair value gap as well. So I'm gonna remove the 15-minute fair value gap. I'm just gonna keep the liquidity taken. Market went lower. It has taken the liquidity. After taking the liquidity, I got the market structure shift. Is this swing high valid for shifting market structure? Obviously. Why? The reason is this swing high traded that fair value gap. Okay, so this swing high is valid for shifting market structure. I got my market structure shift here. That is my market structure shift here. Okay. After shifting the market structure, there is two fair value gap. Our well-known setup. So this is the first fair value gap right here, and this is the breakaway gap from here. This is our breakaway gap. What is the rule? nobody can close below the consequent encroachment of the breakaway gap. Okay, now you actually trade in a higher time frame, so you are thinking market will go, I mean it will go for that liquidity. Okay, there was some liquidity, so you didn't take that entry. You were thinking that market is actually going to fall, so you didn't take that entry, that fair value gap entry you didn't take. Then where is your last up, I mean last body close candle, which that will be your order block. So this is your order block. This is the lowest body close candle, that is your order block. After order block trading, okay, it went little lower, I mean it just broke the order block level, then it went higher. Okay, when market started to go high, first fair value gap should be unfilled, so that should be your unfilled fair value gap. So that is your unfilled fair value gap. Okay, over here, after trading the order block, this is the first fair value gap that should be unfilled. Okay, so that is your unfilled area. Now I'm gonna put it here. Market is going higher, and it is going higher. You are thinking it will reach until that last fair value gap, or maybe it is going to take that buy side liquidity. Maybe it will reach here to this fair value gap, or it is going toward to take that buy side liquidity. Now suddenly you saw market actually came here, until that failed to take trade that area or take that buy side liquidity. It started to go low. Okay, from 15 minute chart it started to fall. When market come here, it started to fall. Now you will look for first the buy side liquidity. Now here as well, don't look at this price action, let it go. I don't know why it is showing like that. Okay, just let it go. So here, just think this price action is not on your chart. From here to here, this is not the price action. You don't know where market is going. But first here, when there was a sell side liquidity, market failed to take that sell side liquidity. It has made a very nice setup. You didn't take that entry, so market went higher. Failed to take the obvious buy side liquidity. Why this is obvious? Because that high has taken by that shallow run. What I told you about the shallow run. If you ever see the shallow run, mark the high of that shallow run. That is your most obvious buy side liquidity. Okay. So you saw market came here, failed to take that buy side liquidity. Now it's going lower. In that case, you will look for the buy side liquidity. Do you have any buy side liquidity? You have that shallow run. That is your buy side liquidity. Or if you look over here, that is also another shallow run. See, this is also another shallow run. So you can mark that buy side liquidity as well. The high of that candle, that will be your buy side liquidity. Now where should be your concern? Is this, sorry guys, I had a call. I will call him back later. Where I was, just a second. Okay, just let me pick the call. Hello, वालेकुम अस्सलाम। जी जी, আলহামদুলিল্লাহ। ভাই না, আমি ক্লাসে বুঝছো। তা তো সময় লাগবে, 2 ঘন্টা 2 লাগবে। কেবল ক্লাস শুরু হয়েছে, রাত 10টা। ওকে ওকে ওকে। I'm sorry, I had a call. I had to just take that one. I'm sorry guys. So why I was here. Okay, when market is actually going to fall again, you have to look for this fair value gap. Okay, this is a fair value gap that should be unfilled. I don't care about any other fair value gap below that fair value gap. I don't need to think about those fair value gap. I will only see this fair value gap, is it closed or not. So this fair value gap is filled over here. Here it's filled here. When this fair value gap is filled, I mean it's traded already, fully closed. Now I will look for breaker block, low, high, lower low. Okay, so I'm gonna put it little here, and I'm gonna mark the setup. This is the low, this is the high, this is the lower low. Between two low, the highest up close body will be your breaker block. So this is that breaker block. I'm gonna mark the breaker block here to here. That's your breaker block. Later, when this breaker block is broken, see this candle has broken that breaker block. Market come back again. Where? To that breaker block. Where did it go? Toward that your buy side liquidity, where you will take your entry. There should be your entry. Your stop loss will just cover the breaker block for the mohawk. And if you go for the extreme liquidity, you have to take a partial around that area. You have to take the partial. Okay, there is no other option. You have to take the partial around that area, and then later price went little higher, then it falls. So that's actually the breaker block, and this is the level where you will look for the breaker block. Okay, you can't look for the breaker block here. Okay, some random thing, nothing works in this market. Now where I did get this all of this information, is ICT given me this information? No, I never. You will never. I can't give you the reference where my ICT told that here will be your breaker block, here you will look for the breaker. ICT never talked about this. Okay, I try to find out where when ICT marked the breaker block or something, I try to find out the similarity, and I got this type of things, and it works for me, so I go for that. Now it's up to you. That's your choice. If you would love to practice like that way, you can. Okay, otherwise just go for the simple thing. I have no problem. This is my experience. This is my what to say, my observation. That's all. Okay, so I guess guys you get something about the breaker block, and I believe it will help you to little help you, okay, to understand what is breaker block. Now don't try to find the breaker block in a live market at your beginning. Okay, after the price action, try to find it out. See the setup here. Now you got the unfilled area, later you got that field. Then you will look for, is there any breaker block happened. This is how you will learn. Okay, this is the way you will learn. There is no other way. Otherwise you are going to be messed up. So please be careful about that. If you have any question, you can ask me, okay, at the same time. So uh hello you people. Hi from Kenya. Hey Ronald, how are you, brother? Still you are here? Shahid, good morning, brother. Hope you had a great week trading last week. Good price action from OPEX week. Just let's see. Next week what's going to happen? I have no idea. Okay, let's see. Let's wish for the best. Walaikum Assalam, Sher Khan. How are you, brother? I took that short one Friday PM session. Completely missed the morning sell off. Ah man, sometimes we miss the entry. So what should be your first job at the weekend? You have to go any kind of calendar. I love to use Forex Factory. So it's up to you. Which calendar would you love to go? Here, when I open my calendar, I saw Monday is our holiday. Okay, so Monday will have no entry. Your videos are amazing. Addition, compliment. Okay, compliment to ICT material. Okay, thank you, AAFX man. I got your thousands of comments, but thanks for commenting over there. I guess it helps the algorithm, YouTube algorithm, I guess. So Monday is the bank holiday. No entry is valid in Monday. Yeah, obviously you can scalp little. I mean, the lowest margin you have to use because it's the bank holiday. It will be low volatility. Okay. Then Tuesday, no news. These two, Monday and Tuesday, try to avoid trading. Then Wednesday, we have the volatile news FOMC meeting. Wait for this. Okay, we are going to get the volatility around that area. So until Wednesday PM session, you should not go for the entry. You should not go for that, brother. Then Thursday at 9:30, 8:30, we have unemployment claims and 9:45 PMI. So we have very nice news in Wednesday and Thursday. I believe that we are going to get better opportunity to take entries around that area. Friday also we don't have any news. So these 2 days is actually the gem. Sorry, bothering you. I'm going to all your videos. No problem, brother. It's okay. It's okay. It's perfectly okay, man. This is the first job you have to do when you will actually start your weekend. Okay, at the weekend you have to do this every single week. There is no chance for this. When you are done, you have already an idea when you are going to get the distribution. Okay, AMD, accumulation, manipulation, and the distribution. So you are going to get the distribution in Wednesday and Thursday. So you will try to to participate into the market around that distribution area. Accumulation area, if you get in, you will be chopped up. Distribution, if you do that, oh man, it's awesome. And closing or low or closing, we are not going to predict that as well. Okay, as we don't have any news around that area. So Wednesday and Thursday next week, this is the best period of time to take entries. I'm done with this. Now let's go for the weekly analysis. I know you guys are very tired and it's weekend. I am not going to waste your time. Maybe it will be 2 to 3 hours only. Just kidding. I'll try to complete our session as soon as possible. So this is dollar index from the monthly chart. Okay, from the monthly chart, what do you see? Market came here, it went lower, it has taken all the liquidity here. Okay, after taking the liquidity, it went higher, retrace, try to go high, come here and come to this fair value gap. Entry fair value gap. What is entry fair value gap? After taking the buy side liquidity, this is the market structure shift. This is your first fair value gap. That means your entry gap. This should be your breakaway gap. Okay. So market trade that area, that entry fair value gap area, then it falls. When it falls, that was the monthly fair value gap. Market came to this monthly fair value gap, it went higher around that monthly fair value gap. So price is now range bound inside to this monthly fair value gap. Look over here. Then market came lower, came to this constant encroachment of that monthly week. This week, why this week is important? Because that week has cleared all of the liquidity around that area. And this is the most obvious week. If you see this type of most obvious week, which has actually taken all the liquidity, in the 50% of that week, always mark them. Okay, always mark that because that is so important, so much important that we constant encroachment, and we use it as a 50% of fair value gap. Okay, the way we use 50% of a fair value gap, we use week 50% the same way. Market came here, that means 50% of the fair value gap. Okay, this is fair value gap. The algorithm look the week as a fair value gap. So it came here, it's just a gap. Okay, no, nothing, just a gap, nothing else. Came here to the constant encroachment, went higher. Where did it came? To this monthly inversion fair value gap. When this candle went higher, this high failed to take that high. It failed to take that high. Then overlapped. This fair value gap overlapped. What I was expecting, if you remember from the last month, I was expecting price will reach until that inversion fair value gap. Then I will decide, is market willing to go lower or is it willing to go higher? Now my expectation is market will go through this fair value gap. So this is just a reaction. Okay, this is just a reaction. Actually market will go through that high, then I will get the monthly market structure shift toward that high, and finally until that last fair value gap. That is my expectation. If I see market went lower again, it's actually going lower, then I will look for the this fair value gap. Below this monthly fair value gap, I have another fair value gap over here. This candle high, that candle low. So I will look for that candle. Okay. Right now, I'm thinking market will actually go through this inversion fair value gap, and it will take that high, finally that high. That's my expectation. I'm not telling that it's going to happen, but this is my expectation, and whatever we are getting right now, that is kind of reaction, okay, from the inversion parabola. This is just a reaction. Price came here, so it has to give us some reaction. This is that reaction. It is respecting that inversion parabola, so it can go little lower. Okay, so brother, it can come here until this order block. It can come until that order block. This is not order block, okay. Be, I mean, just be careful about whenever you are going to mark the order block. Just be careful. This is not even a order block. Now there is a volume balance around that area. Yeah, I'm not going to argue with you. It can come until that volume balance. There is nothing wrong with that. But last time when ICT was in live, he told that volume imbalance is the weakest PDRA among all of his uh, I mean level. Okay, so this is the most weakest, I mean the weakest PDRA. So I'm gonna actually remove it from my chart, but if you want to keep it, you can keep it. So it can reach until that volume balance, but I would love to see market will go through that monthly inversion fair value gap. At the same time, if I see market actually go below that low, or if I see a body close below the monthly fair value gap high here, then I will start to think, okay, this month inversion fair value gap is actually holding the price and sending back toward that monthly lowest fair value gap. Okay, so please mark all of this area on your chart. Otherwise, it's gonna be very confusing by watching only the video like the Netflix or the movie. Trust me, it's not going to help you. You are just wasting your time. I don't want to waste your time, and I believe that you are not here to waste your time. So please mark the level. Even if you don't want to mark my level, no problem, but whoever you are following, please mark whatever they mark on their chart, because there is some reason they mark those level. I have marked all of this level months ago. Okay, it's near about 6 to 7 months ago I have marked all of this level after the inversion parabolic gap. So please, that's more important thing. Okay, you have to do that. Right now this is the reaction. I would love to see market will go through that. Now I'm gonna go to the weekly chart. So here is the weekly chart. You can see market has taken all the liquidity. This all liquidity has been taken already. Then I got market structure shift. Market went lower to the breakaway gap. So this is the breakaway gap. The body didn't close below the consequent encroachment of the breakaway gap. Okay. So this is kind of confirmation that maybe market is it's going higher. Okay. Can you explain in daytime frame? Mayank, please let me go with my I mean with my pace, okay? I'm gonna go until the 15-minute chart. So let me go from the beginning, very beginning. If you don't know what is going to happen from the monthly chart or the weekly chart, you will never find out where market is coming. So I'm gonna remove it from my chart. That is the monthly inversion fair value gap. So let me actually remove it from here. So this is from weekly chart. Market has taken the liquidity, market structure shift, lowest fair value gap, market went higher. When it came here, this is the last fair value gap from weekly chart. Okay, this is holding the price. At the same time, if you look at this leg, okay, this leg, this is the last fair value gap. This candle high and sorry, this candle low and that candle high. This is the only fair value gap you have until here, except this one. So this is the fair value gap. I told you that I want to see this will be open. If it is open like that way, then market has more probability to go higher, to come here, okay, to this area. Why this area is important? Look at that high, that high, they are relatively equal high. At the same time, what do you see? This high has taken by a shallow run. What I told you about the shallow run, if you ever see the shallow run, this marks the high of that shallow run. Now you can ask me, brother, this high is not even a swing high, then why you are giving the importance to that swing high? It's because this is the weekly chart. Okay, I'm trying to make it more simple, and please try to get the point. This is the weekly chart. every single candle is here. If you just go to the lower time frame, you will get some kind of relatively equal highs or anything above that every single candle from the weekly chart. Every single candle, I don't need the swing high. If I get the swing high, that's perfect. If I don't get the swing high, no problem, I will go for the single high. So that high and that high, they are relatively equal highs for me. That's my buy side liquidity. Price came here to that last parameter. If it failed to hold the price, then this buy side liquidity is more obvious. At the same time, if it went lower, I will wait until this fair value gap. Okay, I don't want to see market will come until this fair value gap. As this inversion fair value gap hold the price, send it back toward that buy side liquidity. Here was the inversion fair value gap. Why this one is inversion fair value gap? Low, high, market went lower, failed to take that low, then it overlapped to that fair value gap. When it overlapped, I got this inversion fair value gap, and this inversion fair value gap hold the price, sending back toward that buy side liquidity. This is the last fair value gap. We are getting the, what to say, I mean the reaction from the last fair value gap. This is how I'm thinking right now. Okay, but I'm not telling it's going to happen. Obviously market can fall. We will see that. If it is falling, then we will just change our direction or change everything. I'm just expecting something from the market. If I get that from the market, I'll be happy to, I'll be confident about my entries. Okay, so this is the daily chart, I mean sorry, weekly chart. I'm sorry, I thought I missed it. No man, I didn't reach over there yet. Okay, wonder, hey brother, how are you? How are you brother? I think you were a little late. Now I'm going to daily chart. So from weekly chart, I would love to see market will go through this parallel gap. Now here is my weekly chart. If I come to this weekly chart, I mean sorry, daily chart, this low and that low, I have this relatively equal lows as my sell side liquidity. Okay, when market went higher, it has traded that parallel gap from daily chart. Okay, this candle low, that candle high. At the same time, the weekly fair value gap, it holds the price, send it back. There was a volume imbalance. Price came to that volume imbalance, went higher. Okay. Right now, price is over here, just over here. Now that was that weekly fair value gap. If you remember, where the body closed. See the body closed just above that weekly fair value gap from daily chart. You don't need to observe the price from the same time frame of the same fair value gap. What do I mean by that? If you remember, I told that if you ever get a fair value gap from daily chart, you will look for 15-minute chart and you will observe the 15-minute candle if it can break that daily fair value gap or not. So something like here as well. If that is your weekly fair value gap, then you have to go to your hourly chart and you have to notice that if it can break that weekly fair value gap or not. But from the daily chart, we can see it's broken. Okay. Now I'm little confused right now. It's because I don't want to see this is the fake breakout. Sometimes the fake breakout happens. I don't want to see that, just that one. If I come here, the setup, market has taken the liquidity, market structure shift. This is the fair value gap. Price has traded that fair value gap, went higher, come back again to that order block. The lowest body close candle is your order block. It traded that order block. Now I would love to see market will go higher again toward that buy side liquidity. Finally, that buy side liquidity and over here. That's my expectation right now. If I see market went through this daily fair value gap, look, this daily fair value gap. If I see body close below that daily fair value gap, then I will look for sell side here around that area. I would love to see sell side here or this order block. This is also a order block. So this opening of that order block and the sell side liquidity will be my target. Guys, I don't know you guys are, I mean, understanding my, I mean, by my speaking or not, because I'm trying to go slowly. Okay, I'm trying to talk slowly so that you can understand whatever I'm trying to tell. Please try to understand. It's gonna be boring because price action is always boring. It's always boring. Right now, I'm thinking this order block will hold the price, and send it back toward that buy side liquidity, and then finally it will go somewhere here. I don't need that much big run because just a week. So this is your daily chart. Now I will go to 4 hour chart. Why, brother? Why 4 hour chart? You don't go 4 hour chart. I don't go 4 hour chart for the future market, okay? But for the dollar index, I love daily chart, 4 hour chart, and hourly chart. 15-minute chart also I don't like for the dollar index. I repeat that so many times. So I just repeat one more time over here, okay? You can see this is the relatively equal highs. When I will go to the one hour chart, you will see much more clear way here. But over here, price didn't trade that order block perfectly. Okay, it didn't trade that order block from daily chart perfectly, but at the same time it has traded this 4 hour order block perfectly. Here is 4 hour order block. As I mark the order block from my daily chart, so I am not going to just make it little upper. All I want to see, it will go through the consequent encroachment of that week. This week consequent encroachment body will close above that consequent encroachment. If I got that before reaching over there, market can obviously go lower, little lower. It can go over there. It can take that relatively equal loss. After that, it can expand. I'm expecting higher run. That doesn't mean market can't go little lower. Okay, it doesn't mean that. So market can easily go little lower and then it can expand higher. This low has taken by that. So this is also a shallow run. Market can easily go below to take that shallow run, then it will go higher. I'll be happy to see that. If market come here to this daily fair value gap, see this daily fair value gap, if it go and if it go through that daily fair value gap, then I will look for this whole area. Remember, there is another order block from the daily chart here around that area. That is the daily order block level. So I would love to see how it trade that whole area, and finally this sell side liquidity. Until now, I'm not interested to see that. I would love to see market will expand higher toward that buy side liquidity. Okay, it's pretty good. Okay, thank you, AAFX. Thank you, brother. Hi, how are you today? I have to review it again, but fine. Rain, if you just watch, I mean, review it, then you will get the gem. Okay, because at the beginning of today's live, I believe that I gave the gem at the beginning of this live. So if you review, you will get that. Otherwise, you are going to miss that. Okay, there was very little people, and I just explained that things over there. It's up to you, brother. Kevin, good morning. Good morning plus good evening, brother. Good morning and evening, both of them. Okay. So that is my expectation from 4 hour chart. I want to see market will go and it will body will close above that 50% of that week. Brother, why this week is important? Because this week has traded that fair value gap. At the same time, it has taken the buy side liquidity. Look at this buy side liquidity. Okay. So this week is important for me. I would love to see it will just go through that week. Now, why you are talking about this? Can you give us another example? Okay, let's see if I can find it over here. Okay, look at this price action. This week has taken all the liquidity. Okay, all the liquidity has taken by that week, and this week has traded that daily fair value gap. So if market would love to go higher, it can't go below the consequent encroachment of that week. I don't know it has traded or not, but that is the logic. So I'm gonna mark the 50% of that week. So here is your 50% of that week. Did I change any logic here? Did I do it? Just you have to find out. Okay, I'm changing my word or not. What I told you about that. This week, only this week has taken all of this liquidity. Okay, all of this liquidity has taken by that week. So I'm gonna sorry, I don't know what. Okay, I'm just going to put it here. This week has taken all of this liquidity. At the same time, this week has traded that fair value gap. Okay, that fair value gap was over here, so don't be confused. Now, if market would love to go higher, it can't break the consequent encroachment of that that week. So this is my constant encroachment where price came. Just go to your chart and do it by yourself, okay? And I'm going to remove it from my chart. But if you don't mark it and you are just watching the Netflix, I will request you to leave the streaming right now. Even if you are the subscriber to my channel, please unsubscribe me. Okay, that's my request. Please, please, I kindly request. If you just watch the Netflix movie over here, I don't need any viewers who are here to just for enjoying the video or seeing something like that. Okay, I don't need them. I want someone who is really want to get the concept. I'm just spending my time with, you know, how I manage my time for this streaming. You have no idea. Okay, I'm doing this so that you guys can get something. And now if you just watch the Netflix, you don't take the, I mean, information or the tips I'm trying to give you, then please, please, kindly request leaving me alone. So that was the concept from the 4 hour chart. Now I'm going to 1 hour chart. So this is 1 hour chart, and I'm gonna remove this thing. Okay, this is that week of that thing. You can see market went lower. It failed to trade that water block, no problem, but it has traded this thing. Okay, this whole CPI candle. That was the CPI candle. It went higher. It has traded that CPI candle. At the same time, it has make the liquidity. Where is your liquidity? Okay, when I will be in, that is it over there. Oh, okay, yeah, over there. I guess I will find it over there. No problem. Right now, price is over here. It went lower. It has taken the liquidity. I want to see market will go through this. See, this is the inversion fair value gap. Why this is the inversion fair value gap? Market went lower. It went higher. Failed to take the high. Okay, there is the swing high over here, and there is some, if you just force the market, it will be the swing high as well, but that swing high failed to take that swing high. So this is that fair value gap which is overlapped here. So this is your inversion fair value gap. What is inversion fair value gap, brother? You are just changing your word. This is the monthly chart. Okay, this swing high failed to take that high. This is that first fair value gap. This is overlapped fair value gap. Can you see the similarities around this price action with this price action? Is it similar? This high failed to take that high. This is the first fair value gap. I mean, sorry, the fair value gap which is overlapped by that. Okay. If I just mark the fair value gap over here, here, and here. So this is that inversion fair value gap. Price came here to that inversion fair value gap, fall. Has taken that liquidity. I'm happy to see that it has done its job. I would love to see like that way. It has done its job because it has taken that liquidity. Now I want to see it will expand higher. It will go through this inversion fair value gap. I would love to see that. That's my expectation. I'm not telling it's going to happen. I'm just telling you that that's my expectation. So please don't take anything seriously. Whatever I'm telling you here, this is the way I do the top-down analysis or everything. Okay. So please, it's your thing, your call, you're practicing. Obviously, you can get something else that is totally different with me. There is no problem. As I told that I will talk about the psychology as well in the mean, I mean around when I'm talking about the price action. So you have to give me the space. Okay. Guys, I saw every single YouTuber who are doing the live streaming or they are trying to give something. Okay, obviously everyone is giving some gem. Everyone is potential. Okay, I believe except me because I know nothing about the price action. I'm very noob here and I have no idea about the price action, and I'm not joking. That's the truth. I really don't know anything about the price action, but every other people know so many things. I mean, comparing with me, every YouTuber has some people who actually comment over there, brother, you are giving a gem. That information is so much, I mean, valuable. we are getting benefited, we are actually getting benefited by your concept, or by your teaching, or something like this. Okay, every YouTuber get this type of comments. Now, if you if you ask me, I don't need that. Yeah, if you get little bit, I mean, something from my videos or my streaming, please just write it down, thanks bro, enough for me. Just write it down, thanks bro. Okay, because I want the result. I don't need the appreciation from you guys. I don't need that. I need the result. If you can earn the money, and if you just write to the comment, brother, I have earned 200k USD, maybe it will take 1 year, maybe it will take 1 month. I don't care about that. If you can write it down, brother, I got 200k, and I got some help by your videos or streaming, and I am able to earn that money. Trust me, that will be my achievement. That is my achievement. That's all I want from you guys. If you just appreciate me, I'll be happy for that. But actually, I'm not I'm not fully satisfied. Please make me full satisfied. Please, that's my request. That's my, give it to me. Just give me 200k. I mean, don't, no need to transfer the money to me. No need to do that. Just earn that money and keep it on your balance in your bank. Just let me know, brother, I earned that, because I'm doing this because so that you guys can earn something from here. And if you fail, I will consider that I am failed. I don't like to be failed. I mean, I don't like to be a failure. I don't like it. Okay? In my life, I never failed. Alhamdulillah. So I don't want to fail over here as well. This is a big challenge for me, because I just took that challenge. Whatever. Please, I kindly request, give me 200k. Just give comment over there and tell me, brother, I earned that money. That's my achievement. I'll be happy to see that. Except that thing, I need nothing from you guys. Nothing at all. I will never do the private membership. I will never ask money from you guys. I will never tell you, I mean, something private or something like that. Okay, I will never do that. I will try to teach you from this free YouTube channel. When I will get that, I will be sure that nobody is interested to get something from me. I'll close my YouTube channel. That's all, brother. I'll just close it. I'm kind of mad guy. Okay, I don't have any destination. I don't have any nothing. I have nothing in my life. But please don't make me a failure. That's my request to all of you guys. So that is from hourly chart. I want to see market will go higher through that inversion parabolic gap, but I will accept if market go little lower, take that relatively equal lows, and then if it expand higher, I'll accept that. But I really don't want to see that. I don't want to see that market went lower and take that equal lows. I don't want to see that. That's all from hourly chart. Now here is 15-minute chart. So the finish it, finish it, finish it. We have a lot of work. So this high and that high, they are relatively equal highs. I have that buy side liquidity. I have this buy side liquidity. And above I don't need actually. This two buy side liquidity level is enough for now. You can see market went lower. It has taken all of this buy side liquidity, sorry, sell side liquidity by body close. Okay, so if I just mark uh, here, here, okay, where the body closed below that low. What does it mean? That means this is not shallow run. This is not shallow run. Liquidity has been taken over here. This is not obvious liquidity right now. But as I told from high time frame, it can go, it can go below that low, but I don't want to see that. I would love to see market will be above that area. Okay, I would love to see market will be above that area. Why that area, brother? Why this is important for you? This low, that low, see this area? This is actually from here. This is actually the liquidity level. Now I don't count the fair value gap below the liquidity level. This is the liquidity level. Okay, this low is not liquidity for me. For me, this is the liquidity level. This is all the relatively equal lows. Okay, this low, that low, this is the shallow run, this is run, every single thing is, this is the actually the liquidity level. So I don't want to see price will reach below the liquidity level one more time. Price has done its job around that. It has taken all the liquidity from there. Why it's going, why it needs to go over there again? I'm just expecting this. I'm not sure that it's going to happen. Okay, everything can be changed by Sunday open. Sunday open can be here, just below here. It will just look at that gap. See, this is just a gap. This type of gap can happen in Sunday. Sunday open can be here. I want to see Sunday open will be inside that inversion fair value gap. I would love to see that, and then market will go lower to that gap. Then it will go toward that buy side degree. That's all I want to see, but I'm not sure what is going to happen. This is all about my expectation. When and how I will change my direction, I have already explained that before. So if you just miss it, watch that part one more time. So this is that fair value gap. I would love to see it will go through that. Okay. So it's done about the dollar index. Overall, I am expecting dollar will go higher. If dollar is going higher, all other market will fall. All other market will fall. If market is going higher, if dollar will go lower, all other market will go higher. But yeah, obviously both of them can go at the same direction as well. But normally we expect like that way. If dollar is going higher, all other market is actually going to fall. Time to go NQ. NQ, NQ, NQ. Before coming here, why that? Let me remove all of this. Before starting the NQ, I would love to ask you a question. When I have completed my dollar index explanation, anybody take the notes or not? Okay, just let me know that. Then I will talk about this price action. Guys, if you don't take the notes, or if you take the notes, I have no profit. Okay, you are watching my videos, so I'm getting the views. My channel is growing. Okay, so if you just watch the video, that's that's my benefit. I don't need to worry about you are taking notes or not. But if you ask me, I'm worrying about that. Are you taking the notes or not? That is the most valuable question for me. You have to tell me, or you have to give me the answer. Please let me know that. Are you taking notes or not? If you don't take the notes, I am requesting you, please leave me alone. That's my request, brother. Just leave me alone. I don't need your view. I don't need your subscription. I don't need you anything. Don't avoid this question. Write it down. Otherwise, I'm not going to talk about the NQAs, because from the NQAs, I'm gonna give you something which is actually gonna be very powerful. Okay. So today is the gem day. Okay, yes, sir. Okay, AAFX Shahid Selim, I'm taking mental notes. What's that, brother? What is mental notes? I don't care about the mental notes. I need the paper and the pen. Okay, you have to write it down whenever I give you something. Rain, yes, I'm taking notes. Thank you, Rain. So only three people are actually taking the notes. I am getting upset now. There are near about 33 people and just getting okay. Yes, sir. As usual, I mark level and all your details in my graph and also in my book note. Thank you, Elena. Thank you. Thank you, brother. Rain, in my chart. Use the pen and paper, brother. That is the best learning process. Okay, try to use that. I mean, I'm not giving you any advice about that because it's your choice. But the best way is to learn this concept is pen and paper. You will use the chart empty spaces. Obviously, you will chart use that as well as the pen and paper. Because if you write down something by your hand, you are not going to forget that very soon. Okay? Yes, taking notes. Thank you, Mitul. Guys, at the same time, please don't forget to give me a like, and I always look for the likes. Okay, as some of you actually giving me the confirmation that you are taking notes, I'm happy. Now, I would love to talk 2 to 3 minutes about the psychology now because it's important. Okay, what is psychology? Last week, first day, I got, just a second. First day, I got $17 profit. Then the very next day, I got that profit. Then 14, 1, 2, 1, 2, 3, then 3, 6, 2. So that was my profit for first 2 day. And the last day, I got that dollar loss. Okay? So this is the amount from the last week. I mean, calculation, you know better than me. I am very weak in calculating this thing. So that's the profit. That was the profit from first 4 day. That was the loss from the last Friday. Okay, that was the loss. Now, what is psychology? Every single day I was in profit because I was lucky. Okay, I was lucky. That's why I was in profit because I took so many trades. That's not allowed. If you want to be a profitable trader, the first rule is you can't overtrade. That is the first rule. Just write it down to your rules book. The first rule is you can't overtrade. If you get one trade, very nice or logical entry, you are profitable, done for the day. I don't care about the price action. If you can't stop yourself, either close your chart by pressing the cross on the right top corner or just switch your chart to the paper money. Okay, if you are doing the real trade, either way you have to stop. No way you can't take more than one profit from one day. Then how you will be profitable, man? How long it will take to earn the $1 million? And that just depends. If you just increase the contract size, if you just increase the account size, if you just add the account more, I mean 1 2 3 4 5 6 7 8, how many account you can add? If you just trade the prop firm, you can add the account. Or if you just doing the live money, I mean, why you need more entries? That's my question. The reason is you are greedy. I'm greedy. That's why I'm taking more entries. I get something from the market, let it go. Just let it go. If you want to be the profitable trader, you have to follow this rule. If you don't follow this rule, write it down to the empty pages. You will never be a profitable trader. You will always be the loser. Always you will be the loser. I don't care if even if ICT told me that. I respect ICT more than anyone. Okay, in my life, after my parents and my teachers, the close relatives or someone outside of my circle, I respect ICT more than anyone else. I never respect a unknown person like I respect ICT. Even ICT come to me and tell me, brother, you can be profitable by taking so many entries from the market. I will argue with you. That's not possible. One human brain can't read the price properly. Okay, even after taking one profit. Now, it actually depends with your experience. Maybe you are trading near about 15 to 20 years. In that case, maybe you are allowed to take two, two maximum three, two maximum three entry in one day. But if you are new, like you have experience for 1 2 3 4 5 years, just one entry, done. Close your chart. You took a losing entry, wait for the next session as you are beginner. Okay, but when you will be experienced, then you are allowed to take another entry around that area or around that session. But if you are beginner, at the morning session you take a loss, close your chart or switch it to your paper money. You are not allowed to take another entry around that area. I don't care about the price action, I don't care about the setup, I don't care about how beautiful the thing is, I don't care about anything. You can't take another entry to that morning session. I'm talking to them who are very new to this trading industry, okay, and you are not profitable, someone like that. Okay, I'm not talking to them who are already profitable, and you guys know better than me. I'm not talking to them, so don't take it personally. I believe that there is someone who knows the price action perfectly, but still they are not profitable. I'm talking to them. Psychology is the most important part. This is the most important part if you compare with the price action. Price action is nothing. Nothing. If you even gamble, you will be profitable. Even if you are gambling, you will be profitable if you can control your emotion. But we are human brains and we don't have that experience, so we are emotional. We can't control our emotion. That's why this is the rule. Write it down on your notebook. Try 1 month, come back again, and tell me, brother, no, I'm not profitable. Still, my account is in minus. If you can tell me that, then either you know nothing about the price action, or you just press your button, by your closed eyes, closing your eyes, okay? And otherwise, it's nearly impossible. You take one losing entry, so I'm gonna make contract size 10 now. I have to mitigate my loss. So 10 contract, I will take entry, and if it can just go one handle, I will close. I will mitigate all my loss. It will lead you to blow your account. You take one entry, buy one contract, it is a losing trade. Perfect. Done for that session. Wait for the next session. Try to mitigate your loss from that PM session. If you take one loss from London session, come back to the New York morning session to mitigate your loss. If you can mitigate your loss, you take $200 loss. Come back at the morning session, mitigate your $200 only. Don't go $201. Don't go for that. Just plus commission. So if your loss is 200, so 200 plus commission. Okay, whatever it will be. Just do that, close your chart. Done for the day. Done for the day. Why, brother? Then how long it will take? I mean to I mean to earn much money. How long it will take? Man, this is a beginning. Try to understand that. You are just trying to fit in this industry. There are so many people who are well trained, trained. Okay, you are just going to competition with them, compete with them. Okay, you have to understand the fact you can't be the profitable trader at your beginning by over trading. It's nearly impossible, man. And how long you don't take this advice seriously, you will be the loser. Don't believe me? Keep continue to that. Keep continue to take over trade. Brother, I take an entry to the London session. That was a profitable entry. So at the morning session, am I allowed to take another entry? No, you are not allowed to take another entry. Why? I'm sorry, pardon me. Why I'm not allowed to take another entry to the morning session? I will take another entry. You are not allowed because you are new. You will take at the London session one entry, at the New York session at entry one entry, and at the PM session one entry. So three entry you are going to take, but in time, not now. This is your beginning. Try to fit here first. Just try to fit here. Try to understand the everything. How is this gonna work? Now, brother, I'm gonna look for the perfect entry. This is the fair value gap. Market will come here every single time. I wanna be profitable. I don't want to take the loss. No, this game is not designed like that way. This is kind of ping pong game. Okay, you have to take one loss. You have to take another loss. Then you have to take one win. That win will cover your losses. Then you will take another loss, another win. Then two win in a row. This is your profitable area. That 2 to 3 wins in a row, that's your profitable area. And this game works like that way. But I want to be millionaire within 1 week. Try, man. You will never be the winner, never be the millionaire. Even you can't even get simple small money from this industry. You can't withdraw. It's nearly impossible if you think like that way. You have to think my first three entry will be the losing entry. I'm not telling you that it's gonna be losing entry. You will look for the best entry, but you have to think like that way. my first three entry will be the losing entry. At the same time, if you take on entry, it was a losing entry. You don't feel anything. You won't feel nothing. Why? Because you know it's gonna be the losing entry. I read the price perfectly. That was my entry. There should be my stop loss. I put everything in place, but still I got a losing entry. No problem. It's gonna be the losing entry. You knew that. The very next entry, that is also going to be a losing entry. So if you know the next entry is also going to be a losing entry, why you are actually increasing your contract size? Why are you doing this, brother? You know that the very next entry is also going to be a losing entry. No, man, I know that. I didn't know that. The very next entry is actually gonna be my profitable entry. That's why I'm gonna actually increase the what to say. I mean the contract size because this is going to be your. I mean what to say. I mean winning trade. No, man. If you think like that way, if you ever think your entry is going to be your winning trade, you will blow your account. You will blow your mind. You will blow your account. This is how I trade. Every single trade I told you about three entries, but I took every single entry thinking that it's gonna be a losing entry. So I'm not going to be profitable by that entry. I'm not going to do that. This is how I trade. Now it's up to you. I'm just sharing my thinking process. Your job is to match it with yourself. Are you thinking also the same way or not? I took a loss. Very next entry, I saw this is very perfect entry. I'm gonna increase my contract size, so I have to mitigate my loss, and as the same way, I have to earn at least 5 times bigger than that money, or maybe more than that profit. What was my first target? My first target was I was going to get $1,000, but instead of that, I got $200 loss. So what I am going to do with my next entry? I'm gonna increase my contract size, and then I'm going to take my entry. I'm gonna mitigate my $200 loss. At the same time, I'm going to get that $1,000 profit, which I actually targeted at my first entry. If you do that, you are already a loser. Already you have lose everything. So you have to think like that way. My first three entries will be the losing entry. First entry it's a losing entry. Second entry is a losing entry. The next entry it's also going to be a losing entry. But unfortunately, you got the winning entry. What will you do? Oh man, I'm done. I have done this. I have done this, man. I have win all. I'm super happy. I'm super happy. I'm super happy. No, man. Why you are very happy? Why? Just a business. You are just spending your time over here. So that is going to happen. Okay, sometimes you are going to get the winning entry. Sometimes you are going to get the losing entry. That's going to happen. Why you are so happy? Why, man? And guys, I will actually read your comment later. Let me finish this psychological part first. Then I didn't talk about this Nasdaq because here I'm also gonna put some gem. Okay. So if you, if you really don't, if you are not interested about the psychological part as I tweeted, please just leave and later if you just come back and speed up the video, watch the part of the price action only. Okay, so here it's Sunday. I will talk about the psychology. It's really important for me and I believe that psychology is much more important comparing with price action. So I'm sorry for my bigger or I mean over talking. Okay? So I talk too much. That's the side effect of the ICT. I don't know. So this is the thing, okay? Every single time you take your entry, you have to think this is gonna be a losing trade. It's a winning trade. Just be emotional. I took my entry here. I knew that it's gonna be a losing entry, but it turns, okay? It turns. It's gonna be a profitable entry. So my target profit was over here. Oh, sorry, here. My profit was here. Target profit. I put my target profit here, and I was thinking that market is going to hit that target profit. Now it started to go toward my target profit. No, 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 no. Put it here. Put it here. Put it here. Why? It's going toward my target. So if I can catch more profit here, so let's put it over here. Don't do it. Be emotionless. You have already put your, I mean, when you push your button, okay? When you push your button, can you change the entry? Can you like the stop loss, right? Let me make it. So this is your target profit. You can move your target profit, no problem. You can move your stop loss, no problem. Can you move your entry point without adding more? Can you move the entry point? You can't. Think like that way. I can't move my entry target profit. I am unable to move my stop loss. I mean, I can put it here, no problem, but I can't make it bigger. I can't do it. It's done already. Done. I thought that was my first analysis of the chart here. So I took my entry around that area. I took my entry around that area. I put my stop loss here. Okay. Sorry, that one. I'm sorry here. So I took my entry here, and that is my stop loss. I thought market won't go below that area. So I put my stop loss here. Now market is going lower. So I'm also putting my stop loss more lower. It is falling, I'm going. It's falling, I'm going. Finally, I put it here and I thought, okay, if it hits me now, I'll be stopped out. Why? Why you are moving your stop loss? Stopped out over there. Just stopped out over there. If you think market is market can't go below that low, if you think like that way, take a re-entry around that area. Just take a re-entry around that area. If you do that, what will happen? See over here. If you are right, then you are going to get more area for your profit. More area, okay? If you are wrong, then you are going to at least you are going to save that amount. That amount of money you are going to save. So why you are actually moving your stop loss? Don't do it. Let it hit your stop loss. Why then? If you even, I mean, if you just move your stop loss, why then do you need that stop loss? Why do you need that stop loss? What is the importance of that stop loss? Stop loss means you are forbidden to move your stop loss against your entry. Okay, so if you would love to put it to the break even, I'm not telling you that no, please don't do that. I'm not telling that, but you are not allowed to increase your stop loss. Your first analysis is the easier last analysis. If you already push your button, wait, wait, wait until it hits your stop loss. If it hits, and if you are really experienced trader and you know that market is actually going higher, in that case, try to re-entry around that area. Try to take re-entry, but don't move your stop loss. I don't know you guys are getting my point or not. This is the reason you are not profitable. You know better than me about the price action. Every single of you, I believe that you know better than me about the price action. The thing is your psychology. When you take an entry, either you put your stop loss in a illogical level, or maybe you are actually moving your stop loss. Maybe you are not putting. I mean, when you saw the run according, I mean, toward your buy side liquidity or your target profit, you are just putting your target profit over there. Don't do that. Just don't do that. This is the psychological issue, guys. This is why you are not profitable. Trust yourself. Believe in yourself. You know better price action, man, because you are spending time. Time is the most valuable thing in this world, in this life. Everything. You can't buy time. You can't. So time, you are actually spending the most precise thing to this emotionless market. Then how can you be wrong? You are never wrong, man. The thing is, your mind is playing a game with you, and that's why you are you are not profitable. Try to understand the concept, okay? Okay, okay, I will grab my notebook. Sorry, brother, no problem, Shahid. Denny, hi Tito, how are you? I'm fine. Denny, how are you, brother? Mine and your analysis is very similar, but I don't understand why I'm not profitable. Mayank, whatever I told you, try to match. Okay, if anything you do, try to avoid that. If you don't do that, there's some other psychological issues also. I will talk about them after the NQ analysis. Okay, I wrote that in my journal from last week. No overtrading and no winning trade turn to loser moving forward the next week. Okay, moving forward. Okay, I got it. You can trade any strategy with very good psychology. Show it. Thank you, brother. But actually, it's fine. I mean, trading is just fun, nothing else. Okay, you will be profitable if you can control yourself. But I never see ICT take a loss. ICT took so many losses. Last week he took three losses in a row. Whatever. I will just every single people take the amazing sentence and rain. No one will turn profitable over trading. It's true, man. It's true. Elena Costa, can you explain about the risk management in a funded account? I use 50K account and sometimes stop loss can be 500 if I use one contract with NQ. In that case, can you hear me, guys? Can you hear me? Hello, 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 mic testing. Hello, guys, can you hear me? Please let me know that. I think there is a internet issue. Just let me know that if you can hear me. Oh, okay, you can hear me. Thank you, thank you, thank you. I thought it's an internet issue. Elena, if you take, I mean, if you see there is a $500 stop loss, then you have to avoid that entry. Okay, you have to avoid that entry. You can't take that entry because your maximum loss should be $250. Maximum loss. So it's near about 12 to 13 handle. Okay, maximum loss will be $200, $250. You can't take more than $250. So, or if you ever see this type of entry where your entry and the stop loss is near about $500, then either you have to move to MNQ, that means the micro contract, or you have to avoid those entries. Okay, brother? Elena Costa. And the risk management, I actually love to go for the handle. Okay, because most of the time when I'm alone and I do my trading, I go for some kind of obvious setup. Okay, in that case there is low probability to hit my stop loss. That's why sometimes I put bigger stop loss, something 15 to 17 handle, something like that. I put bigger stop loss because I know market is not going to hit my stop loss. And this is how I trade. But if you see $500 loss, then you are not allowed to take that entry. Either you have to move to MNQ, that means the micro, or you have to avoid those entries. I guess you got your answer. AFX is yes, we can hear. Okay, thank you, Rain. KC Jeff, how are you, brother? Okay, great. Yeah, you can hear me. Okay, so a lot of psychological issue has done, and now here is Nasdaq. This is Nasdaq weekly chart. Where price is going? Do you have any price over here? I don't have. I don't have any price, so I don't know where market is actually going. If market would love to go lower, I have so many level around that area, but if market is going higher, I have only the moon and the star around that area. Just moon and star, nothing else. So if market would love to go higher, I'm just helpless. Okay, I have no idea how far it will reach and how it will react, when it will reverse. No idea. Nobody can tell you that. If market would love to go lower, I'm fine. Now look at every single week. 1, 2, 3, 4, 5, 6, 7, 8, 9. After 9 weeks, we got a bear week. Then 1, 2, 3, 4, 5. 5 weeks, then we got a bear week. One just bear candle. One just bear candle. What you are thinking? Where market is going? This is the weekly chart. You have to predict the weekly candle. You have to predict, okay? Nvidia earnings on Wednesday will be selling for NQ. Yeah, we have news in Wednesday. Yeah, I think Wednesday and Thursday we have the news. Let's see what happens in Wednesday. But I don't know what's going to happen. Okay, in Wednesday because we have the FOMC as well, and we are at the all-time high. This is the all-time high. Okay, what should be your expectation? Where market is going? Is it going higher? Is it going lower? Now, if there was any price action, you could tell that no, brother, there is a last parabolic gap. So market is actually going to that last parabolic gap. Then it's going to fall. Maybe there is a order block. Market is actually respecting that order block. We don't have any option. Okay, so when we don't have any option, simply I'm thinking market is going to fall. How can you tell you, brother, market is going to fall? You're just guessing it. Let's see. Market went higher. It traded that parabolic gap. Okay, it has traded that parabolic gap. Then it went higher. So I'm going to use the standard deviation, the lowest body until the highest body. So this is the is that highest body or is that highest body? Let me actually check it. Which one is the highest body? Is it no? Here. So that is the highest body. So I have used the fib retracement level, high, low, higher high, this high and this low. So this is that. Hey George, you are late, brother. This is the fib, and I saw market came to the -2 standard deviation. Okay, so this is that. Let me actually check. Did it trade that perfectly or not? Okay, so it didn't trade that area fully. There is a small gap toward that -2 standard deviation, but it was very near to that -2 standard deviation. It's a very strong place for me. I love -1.5, -2.5. These two level I love more than anything. Now, when market came here -2, sometimes we got the reaction. That can be the reaction. Okay, that can be the reaction. I'm not sure. Okay, let me check. Is that the lowest body or is the lowest body? Perfect. Yeah, it was very near to that -2 standard deviation. It failed though. Okay, to touch that area, but it's okay. I believe that it's okay. So I'll just let it go. I'm thinking it is retracing from that level and it is going lower. How long it will fall? I have no idea. I would love to see it will fall little bit, okay? Until that consequent encroachment of that week. I would love to see that. Now remember from the weekly chart that level is -2 standard deviation. Just remember that part, okay? Hello brother, good day. Good day brother, how are you Ryan? Ryan please. How are you brother? Just remember, this is the -2 standard deviation. So I'm gonna remove it from my chart. I would love to see market will fall. If market would love to go higher, we have to do the scalp, so we can't predict anything at the all-time high. So I'm gonna go daily chart. Now I am at the daily chart. Alright. There is daily chart. Market went higher, it went lower, stayed at that parallel gap, went higher. This is the market structure shift. See this high when shifted. This is my market structure shift. This is our parallel gap, entry parallel gap. This is the breakaway gap. The low gap is the breakaway gap. This is the entry parallel gap. Market came here to this parallel gap. It went higher. Where is your order block? This is your order block. Look at this candles open or the close. Yeah, open. That's your order block. Now, here is a twist. When I go for the both order block and when I go for the single lowest body close candle, this is the lowest body close candle. After that, this candle, where did it close? Above that close, above that candle. Okay. If I see the body close above that one, then I actually love to mark the lowest body close candle. I would love to go for that single candle. I don't want to go with the consecutive order block. If this candle close above that consecutive candle's high. Okay, if it could close, if this candle could close above that high, if it could close above that high, then I wouldn't mark that lowest body close candle as my, was that? Hello bro, can you please explain daily buyers? Deepak, what is daily buyers? I don't know, brother, what is daily buyers? What is the reason for you to mark out the lower fair value gap and not the above it, the one in December? Brother, I mean, here this one, that was a very what to say, I mean, previous price action. Okay, there was something I told that, I mean, that was different price action, it's already done. That was the last fair value gap, and I wanted to see this fair value gap will hold the price. That's why I just marked the lowest fair value gap. I always go for the lowest fair value gap. Here, this is the lowest fair value gap to that leg. Okay, this is the consolidation. If market can go through this fair value gap, then this is the last fair value gap. See this candle here, that is the last fair value gap. I would love to see market will go through all of this level. Here the price action was totally different, and if I start to talk about this one, it will take 1 hour almost. If you would love to see this one, when did it happen? So it was Friday. Friday. Okay, so 5th January 2024. After 5th, 6th, 7th, I guess in 7th January 2024 or 6th January 2024, I did the weekly analysis as well. So please watch that weekly analysis. I believe that you will get the information from there. Okay, brother. Hello everyone. Hope enjoyed. Yeah, we enjoyed our weekend. Don't forget to give me a like, guys. Please, thanks for liking my videos and subscribing to my channel. Okay. So this is the breakaway gap and this is the entry gap. I didn't mark the entry gap because it's clean to see. So if you would love to mark it, you can mark it. This lowest down body close is my order block. So order block has level. This is the high, that is the order block start, and this is the end of the order block. I love the end of the order block, but sometimes price just come to this order block high and then see, boom, it has taken all the liquidity from there. Liquidity taken. Now I'm expecting market will fall. That is my expectation. Okay, brother, will you be looking for bearish breaker in the daily chart? No, there is no breaker, brother. Sorry, brother, but there is no breaker, bro. It's breakaway gap. What's breakaway gap? Breakaway gap. If you see after the setup, okay, market has taken the liquidity, market structure shift to fair value gap. If there is two fair value gap after shifting the market, then the first fair value gap should be your entry gap. This one, okay, upper one. This one should be your entry gap. The lower one should be your breakaway gap. Breakaway gap means price won't reach to that fair value gap. If it reach to that fair value gap, it won't go below the consequent encroachment. That is my expectation. Even if it went little below of that consequent encroachment, body can't close. Body has to close at the level of the breakaway gap or above the breakaway gap. So that should be the breakaway gap. Okay, that's the breakaway gap. Harrison, Harrison, thanks, bro. For what? Harrison, for what you are giving me thanks, brother? So right now, I'm thinking that market is going to fall. I'm not sure it's going to happen or not, as market is at the all-time high. I would love to see market is going to fall. Now let's see where market went. Same thing I'm gonna do over here. The lowest body to highest body of that retracement. Okay. So this is that retracement. Sorry, is it? No, not that one. Sorry, that's not the thing. Here was that setup. The real setup was over here. Market has taken the liquidity, market structure shift, price came to this fair value gap. The last breakaway gap. So high, low, higher, high. So this is not the setup. This is just falling. Market is going to fall. Okay, that's why I'm sorry. That's not the point. Here is the point. So I'm gonna mark the high and the low of the body. Okay, so here let's see the lowest body to highest body. Do you remember there we got -2? Now we will see the standard deviation here. The lowest body is here. This is the lowest body, and the highest body may be this one. So that is the highest body. Yeah, that is the highest body. That is the lowest body. Okay. Now let's see where market reach -1.5. Yeah, it missed for little. Okay, for a very little it missed. Sometimes, actually, sometimes ICT mark the high and the low. Okay, the weak high and the weak low. If he see that it missed for a little, if he see missed that level, in that type of situation he marked weak to weak. If you just mark weak to weak, you will see it as it has rejected from -1 standard deviation. That is the fake breakout. That is the perfect retracement. Okay, now I actually don't get that point why sometimes marked week to week, even if it's I don't know. Okay, I don't know exactly. So I actually always go for the body to body. Okay, and if you go for body to body, you will see it reach until the -1.5, so it missed for a little. I'm thinking that it has traded that -1.5, so it's rejecting from -1.5 standard deviation level from the daily chart. From weekly chart, it was actually rejecting from -2. From the daily, it is rejecting from -1.5. I'm now confident that maybe market is going to fall. This is the time to fall. Another thing can happen. Market can reach higher until that -1.5 standard deviation. It can reach until that. Welcome, Ryan Chris. Chris, thank you, brother. Thank you for being my member. I mean, for getting the membership. Thank you. I really appreciate that, man. Thank you. Did I miss anyone's comment? Thanks, bro. Okay. A daily bias analysis. Oh, okay, Carison. I got you, brother. Can you explain daily bias, brother? Deepak. Deepak, how long you were here, brother? This is beautiful price action. Thank you. Thank you, Ryan. Thank you, brother. And Deepak, please tell me how long you have just joined. Please let me know that, brother. So price has been rejecting from the -1.5 standard deviation from the weekly chart. It is rejecting from -2 standard deviation. Okay, so these two level is making me confident that maybe no Deepak, not last 5 days. I mean, I asked you today. When did you join? Just today. When did you join? How long you have been with me? You have been watching. Right now, I'm thinking market will fall. Now, as I told you guys, this is my expectation depending on the price action. Market is at the all-time high. If you come here, the monthly chart, this is the monthly chart, okay? Look, where the price right now? At all-time high. Nobody can predict the price around that area. Nobody has that power to predict that price. Deepak, okay, brother, then you have to watch the first part, brother, because I have already done the analysis from the DXY and from the Nasdaq. I have just started though, but you know, how many things you have just already missed. We need to see where Sunday Open will be. Yeah, absolutely, Shahid. Sunday Open will tell us so many story to us. Okay. I would love to see Sunday Open will be lower. Okay, just remember, I would love to see Sunday Open will be lower. It will open somewhere here, then it will go little lower, then it will trade that opening gap, then it will fall. I would love to see this type of things. I'm not telling that it's going to happen, but that is my expectation. When I will be sure that market is going to fall, market is actually falling. See this low. If I see a very energetic run to that low, in that case I will think, okay, market is going to fall. Why not that low, brother? You previously told that if you see a swing low which has taken the liquidity, you are going to mark the consequent encroachment. Then why you are not going to mark that consequent encroachment? Okay, let's see. That was the swing low which has, I mean, the relatively equal lows which has taken by that low. Okay, and what do you see over here? What is that? Can you tell me what is that? That is shallow run, brother. What did I tell you about the shallow run? If you ever see this, just mark the low. That's gonna be your obvious liquidity. So this is actually the liquidity. I'm not seeing this as a weak which consequent encroachment will be respected. Why? This swing low didn't trade any fair value gap. It didn't take any liquidity. Yeah, it has taken the liquidity, but with a shallow run. So it has made this liquidity more obvious. Now, if it's a more obvious liquidity, I'm not going to mark the 50% and just thinking that it's not going to take that obvious liquidity. I'm not thinking like that way. Maybe I'm wrong. Maybe market will go higher, but I don't care. I want to say market will take that obvious liquidity first before everything. If this low is shifted with energy, okay, something like this, market just fall, okay, big candle fall with a fair value gap, very nice fair value gap. Then I will start to think, okay, this is the time market is coming more lower. Until that, I'm bullish for Nasdaq. I'm expecting market will go higher, but that doesn't mean market can't go a little lower. That doesn't mean that it can easily go lower and take that liquidity. After that, it can reverse. Obviously, it can reverse them. Okay? So this is all. I mean, all in a sequence, something like that. Monday we have the holiday. Yeah, brother. Monday we have the holiday. Tuesday we don't have any news. Wednesday and Thursday we have the news. We are getting the distribution in Wednesday and Thursday, I believe. So all of this part we have done already at the beginning of today's streaming. So, uh, but thank you, Amin, for telling me that. Thank you, brother. Learning a lot today. You are most welcome, Ryan. Greed index is very high now. We need to dump lower. Let's see, Shahid. I can just understand the price action, and now I'm studying the seasonal tendency. Okay, so seasonal tendency is also important, but before I didn't actually pay that much attention on seasonal tendency. I have just started that part, seasonal tendency part. Okay, so how low should taken liquidity for you to be valid? Liquidity has taken, brother, here. Okay, so if you ask me, I want to see the body close below the relatively equal lows or relatively equal highs. I want to see the body close. If I see the body close below that liquidity, that's taken. Okay, that's perfectly taken. But shallow run, that makes the liquidity more obvious. Mehi, where are you from, Mehi? I guess this is the first time I saw your name on my comment box. So this is from daily chart. If I guess it's clear to all of you guys. Okay. Now I'm going to go to hourly chart. So here is my hourly chart. Let me show you what price has done from the hourly chart. It has traded this fair value gap. See, this is the last fair value gap. It has traded that last fair value gap. Then it fall. When it fall, it has taken the liquidity that high, that high. See this high. They are the relatively equal highs. Market has taken the liquidity. This is the liquidity taken. This low is valid for shifting market structure. I got the market structure shift. Very nice term. This is the first fair value gap. This is the breakaway gap. Guys, our well-known setup from the hourly chart. Price came here to our first fair value gap, broke lower. Where is your liquidity? There is your liquidity. Okay. See this all of this low. This is your liquidity. I'm expecting market will come here to take that liquidity. After taking that liquidity, I will see how price can, I mean, reverse, or if there is any other way market is actually going higher or lower. Every single other thing I will see later, but first I want to see market will take that relatively equal lows, because this is the most strongest support zone ever right now in this price action. This is the support zone. Every retail trader that would buy around that area. One top, sorry, one down, double down, triple down, triple bottom. We have triple bottom. Market, if market can come here, they are going to buy again. Why? Because this is the strongest support zone ever. Where should be their stop loss? Below that low. Look at this low. Below that low. That will be their stop loss. If market can take that low, where is your next liquidity level? You have to decide. I am not going to decide that. Where is their stop loss? You have to decide. Lot of people put their stop loss below that low. Lot of people, okay? Most of the people put their stop loss below that low right now. Why? Because this is the most obvious swing low. So this is the thinking right now. I'm thinking like that way, but it doesn't mean you will go for this. Everything can be changed after Sunday open. As I told, I would love to see market I mean, it will open lower, it will take that fair value gap, then it will fall again toward that sell side liquidity. Okay, all of this sell side liquidity from hourly chart, because we got our setup as well. Market has taken the buy side liquidity, market structure shift, first fair value gap, price trade that, it left that breakaway gap open like that way. Now it's falling. So it should take at least that liquidity. Let's go to 15-minute chart. So here is my 15-minute chart. In 15-minute chart, you can see this low, that low, relatively equal lows, equal lows, equal lows. So this is three sell side liquidity level I have. At the same time, I have this last fair value gap from 15-minute chart. I have this last fair value gap from 15-minute chart, and I have upper fair value gap over there. Okay, so this is the also last fair value gap. This is also last fair value gap, and sorry, not the last fair value entry gap, and the last fair value gap over here. There is entry gap from 15-minute chart. Market has taken the liquidity. Market can easily come here until that 15-minute fair value gap, then it can fall toward that obvious liquidity, obvious liquidity, obvious liquidity. This is the liquidity. Do you have any buy side liquidity, brother? Do you have any buy side liquidity? Let's see if we can find out some buy side liquidity, clean or relatively equal highs. Can you see any relatively equal highs on that area? I don't see. So nobody see. I mean, there was a relatively equal highs. Okay, that high and that high, they're relatively equal highs. Market has taken that high. Then market has made this high and that high, relatively equal high. Market has taken that high. Did it make another relatively equal high? No, it didn't make another relatively equal high. So I don't have any buy side liquidity. Whoever takes sell, depending on that relatively equal highs, nobody is willing to take sell around that area. Why? Because they got stopped out here, 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 here. They got stopped out. All of the area they got stopped out. They are not brave enough to sell here from a single low, where the double, sorry, from a single top, where the double top is not working, triple top is not working, single top, how can it work? So they didn't take sell. But here, who were the buyers? They are still profitable, man. Who took the buy here? They were thinking that market is going to take that all-time high. All-time high is always the strongest buy side liquidity. So it was going to take that all-time high, but it failed. It failed to take that all-time high, and it was very hurry. It didn't even reach to that 15-minute fair value gap. That means it has some unfinished job which has to be done. It was very heavy, very hurry to do something. That's why it didn't even reach to that fair value gap. Market never retrace from a random level. Then why, brother, price retrace from there? It has traded the hourly fair value gap. I don't go for the hourly fair value gap. Okay, I don't go for the hourly fair value gap. I'm seeing this as my liquidity. So when market will do its job around here, then I will think this buy side liquidity or this last fair value gap will be the target. So remember this part of my streaming. When market will done its unfinished business here, okay, it will take those liquidity, maybe the extreme sell side liquidity, maybe I'm not sure about that. When it will take all of this liquidity, then this high will be your target. This last parabolic gap from 15 minute chart, that will be your target. That is my expectation from the market right now. Price can easily go higher, little higher. There are also relatively equal highs from 1 minute chart. It can take that buy side liquidity and it can retrace from that 50-minute parallel gap, then it will fall. But all I want to see, it is going to fall. So this 17542.25, that's my target. That's my bias. That's my target. At the same time, I have some sell liquidity around that area, and I'm going to remove this one as I have that 61 and they're very near each other. So I'm gonna remove that one. So here, this liquidity, below that liquidity, this last 15-minute parabolic gap, and also there is another entry parabolic gap. So you have to careful about both of the parabolic gap. I just marked the last parabolic gap. You have to mark the upper one as well. Below that sell side liquidity, this is the parabolic gap. Below that sell side liquidity, I have this 15-minute parabolic gap. If this 15-minute parabolic gap fail to hold the price, this low is obvious. Okay. If it failed to hold the price, then this is sell side liquidity. We have more sell side liquidity around that area. So it's the far future. Okay. I don't need to talk about this sell side liquidity right now. This is my target. Either of this sell side liquidity has to be taken. And after taking this, I would love to see how it reacts. I mean, if it can go toward that 15-minute parabolic gap. I'm bearish for NQ. In short, I'm bearish for NQ. Okay. Yes, regional tendency. Sorry, seasonal tendencies. Say February is usually lower in summer months. That's why ICT starts trading only in February. Yep. Mehi, yeah, first time. Okay, Mehi, thank you for subscribing, brother. Shade Selim, forward chart also shows clear rejection of order block for Friday sell. Thank you, Shade, but I don't go forward chart, brother. You already know that. Looks like high resistance liquidity run without buy side liquidity. It should not be the high resistance liquidity run. It should be smooth liquidity run, as I'm expecting dollar index will go higher. It should be a clean or smooth sell side liquidity run. Okay. Great analysis, Tito. Thank you, George. I'm done. I mean, I have done the analysis part, but guys who are actually join later, at the beginning of today's streaming, I talked about something. I believe it will help you a lot. Okay, so uh, if you want to get that, you can watch the first part of today's live streaming. Trust me, it's gonna help you, man. Get answer. Okay, Wagwan, great stuff. Thank you, sorry, Fluff FX. But what does it mean? Wagwan, Wagwan, Wagwan. I don't know what does it mean. So that is the analysis part for the Nasdaq. Okay, Nasdaq. I mean, analysis part has done. I believe that there is nothing we have to talk about. No, no, what I was thinking about to talk. Let me actually remember one more thing. I actually thought to talk about something, but I forgot. I forgot. Okay, I forgot actually. No problem. Just let it go. Now, guys, if you have any question, you can ask me the question. I will answer your question. Otherwise, I'm gonna close today's session because I forgot actually. What I wanted to tell, I forgot. So it is gonna be a small streaming. I mean, near about 2 hours though. But yeah, I will wait 5 more minutes. At 11, I will complete. I mean, I will just end today's session if you don't have any question. If you have any question, then oh, okay. It is like saying hi. Oh, okay. Hey, Fluffx FX. I guess you are also new to my channel. How many subscribers do I get today? Let me check it. Did I get any subscription? I got one subscription today. Thank you. But one subscription is cool, man. It's cool. You're most welcome, Elena. Thank you for joining my streaming. I guess nobody has any no question. I'm little slow. I know. I mean, my streaming is late or yeah, little delay. I'm just waiting. Okay. So if you have any question, you can ask me. At the same time, guys, please, Mulfarma, IID. This concept also works with Euro USD and GBP USD, or there anything specific about major forex pairs? Mulfarma, everything works in forex. Okay, every single thing works in forex. The thing is, nobody willing to trade forex right now. It's because forex has more manipulation, and it's actually human manipulation. Let me actually go over there. So forex.com. See this week you will get different in with different broker. Okay, that's why people the great traders who are the best traders, they don't trade forex right now. Okay? It's kind of bigger manipulation. In future market you can place your stop loss with precise price action, which is nearly impossible to put in forex. So I actually don't trade forex from 2020. But yeah, this thing perfectly works in forex. You have to just be careful with your stop loss. That's all, brother. Trend is bearish, triple bottom on the lower side. Yeah, Phil, absolutely, Phil. Thanks a lot again. Amazing streaming. Thank you, Rain. Denny, thank you. No problem, Denny. Ryan, I watched about your breaker block lecture, bro. Greatly appreciate it. Now I know how to determine high probability breaker block. Yeah, Ran, that's the part. I actually started with the breaker block today. That's why, okay? Because there is some misconcept, and I'm not trying to rename anything or recreating anything, okay? I'm extremely sorry for that. Let me make that more clear. I don't know what is breaker block. I don't know what is order block. I got the similarities whenever ICT marks the breaker block or the order block. I try to find out, like for example, today ICT mark this one as a order block. For example, okay, today after after 1 week he marked another level where he marked another order block. So he marked this one. Maybe after 15 days he marked another order block here. Okay, here. Now I opened all of these three order block area and I try to find out why he marked that candle specifically. What is the similar between three three area? What is the similarities? Then I find out something. I don't know it is I'm right or wrong. Okay, I really don't know. But I found out it works most of the time. It's perfectly working for me for 99.99% of the time. So I thought, okay, maybe I can share it, but I'm not telling you to take it seriously. Do it. I mean, take it, backtest it. After that, if you find it helpful, use it. Otherwise, just throw it. Okay. That's the thing, man. Please don't blame me for anything. That's my request to all of you guys. Brother, I was testing the concept I learned from your videos on Euro USD and also weekend Bitcoin. Even at 1 minute, it fucking amazing. Okay, thank you, FX. FX. I really don't know it works in Bitcoin or not because I never trade the cryptocurrency, never. So if it works in Bitcoin as well, then I'm really surprised. I'm really surprised because I didn't know it's working in Bitcoin or not. But thank you, no problem. Mulfarma, thank you, Titu. You are most welcome, Mulfarma. Shahid, thank you for streaming, Titu. No problem, Shahid. Feel better. Oh, I was meaning Nas in bearish lol, but we are in a daily order block region despite that. Phil, actually, I explained that there is no order block. So market is, let me come here one more time. Look over here, okay? The order block trading has done around that area. That was done. The order block done here. See this candle, that was the order block. So it has done its job, or already order block has done its job. Now there was an area, look over here, this area, okay, here and here. This area should be unfilled. This area should be unfilled, but by that candle, it's filled now. If market can make another lower low, okay, below that low, or something like this, if it can make another lower low and then if went higher above that candle, see this candle, this will be my breaker block. This will be my breaker block. Market will come to that breaker block, then it will boom. So I'm not interested about the order block. I'm not interested about any other fair value gap. I'm not interested about anything here. I would love to see market will go lower. How long? I explained that. See all of this low? It should go below that low to take the liquidity. At the same time, between two low, okay, low and lower low. Between two low, the highest up close candle is the breaker. If market after coming and taking all the liquidity, if it can go and close above that highest up close body candle and come back again there, this will be my breaker from daily chart. This is the daily breaker. Guys who were with me from the beginning, remember what is the rules of the breaker? You remember, okay? Market has taken the liquidity, market structure shift. This is our well-known setup. This is the first fair value gap here, and let me remove this one. This is the breakaway gap. Market came to the first fair value gap, it went higher. Lowest body close candle, that is the order block. Price tap to this order block, went higher. When it went higher, close above the order block level, look for the first fair value gap. Where is your first fair value? There is your first fair value gap. What is that fair value gap? That is the unfilled area. That area should be unfilled. Market came back, filled that area. What will you look for now? What should you look for now? Okay, see, that is the high, that is the low. Amma, alhamdulillah, awesome. Awesome. Here, has to close above that. This is your order breaker block. Price will tap to this breaker block and boom. This is the expectation, okay, guys. I mean, again, I'm sorry, but to be honest, I'm not renaming some concept of ICT. This is the thing, it works for me. So I go for the breaker. I look for the breaker here. I'm not looking for the breaker here, okay? So you can tell me low, high, low, low, okay? Something like this. So this is the breaker. So price came here to that breaker, then it went higher. No, I'm not thinking like that way. This is not even a breaker. Here, if you come here, low, high, lower low. So the highest up close body, this is the breaker. No, this is not the breaker. Here the breaker will be happen here. Okay, here. The breaker has to happen here. If it doesn't make the breaker, if it started to go low, no problem. I don't need to worry about the breaker then. So that's all, and there is no order block as well right now. Someone can think that this is the order block. No, this is not the order block. Why every candle is order block? This one is order block, 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 here this one is order block, order block, order block, order block, order block, order block. No man, how many order block do you have? There is some sequence, man, and I have already explained that. Every time I tell that I don't want to talk about order block, and every time I just, this is a sequence, so there should be the order block. I'm just kind of sorry, man. Okay, FOMC on Wednesday. Yeah, FOMC at 2 p.m. actually. So there is no meeting, just FOMC news. Okay, still bit no FOMC, only minutes. Yeah, there is no meetings. Right, I used to trade crypto, so glad to shift it to index futures and no turning backs. Please Ryan, don't turn back because future market right now is the most precise market, and if anybody would love to be profitable, they should trade the future market. No forex market, no crypto market, no other market. If you want to be profitable, you should trade the future market because here no manipulation. Okay, in if you just watch the video from Umar, ICT student, is also very popular in YouTube. Just search Umar. I don't know if he has any Facebook, I mean YouTube channel or not. He explained that very perfect way. Okay, why the new people trade forex? Because forex is the most manipulated market right now. Then why you want to be manipulated where there is a very nice and precise market over here, which is actually the future market? You should not go for the sorry, forex market. There is your future market. Come here and trade over there, earn some money, easy money. Do that. Why you are putting yourself into the more bigger risk by trading the forex market? But actually we guys know that forex trading it's popular. Okay, we actually, that's why we trade forex. Euro USD, it's popular. I didn't know what is future market. I started my trading with forex as well. Now I was thinking forex is everything. I mean, if you want to be profitable, you have to trade forex. That is the easiest market. But to be honest, if you ask me, forex market is the very difficult, man. Okay, three drives pattern on the daily chart. That's a failure swing high. IC talks about it in his core content. So three drives, if you just, I don't know which one you are actually marking, one, two, three, or something like this. One, two, three. If you see like that way, yeah, I saw that. Okay, I saw this three drive pattern, but the thing is, I'm also learning the three drives pattern. Okay, I'm learning that, to be honest. So I'm I saw that, but I didn't talk about this. It's because I'm also learning about three drives pattern, and now it failed. So everything is actually matched perfectly, but I'm not sure it is going to work with depending on that three drive patterns or not. I'm learning, brother. To be honest, yeah, the gentleman's market. Yeah, it's the gentleman's market. To be honest, Ilvet, like the idea. Thank you. Perfectly awesome, brother. You're most welcome, Ryan. Okay, guys. I guess you have no question, and I can close my streaming for today. And tomorrow morning session, I'll be here. Okay, because we will try. I think I will trade the paper money. I'm not going to trade the real money at the morning session. Because tomorrow is the holiday. The Monday is the holiday. So I will stay from 9 to 12. If anybody is interested, then you guys can join. Okay, but we that will be fun. We will just do the paper money. I'm not going to take entries through my real money, and even if you force me, I am not going to do that. Tomorrow is the holiday, no volatility, so we will just push our button. We are not going to take any loss, we are not going to take any profit. As last Friday I just stopped with 700 loss, and um, it's kind of painful. Okay, thank you guys, thanks for joining to my channel. If anybody is new, you can subscribe to my channel. You can give me a thumbs up before leaving the streaming. And if you know, I mean, if there is any way to share the channel link or something, you can share. Okay, I don't know, but if there is any way, okay, so that new people can know about my channel, that will be grateful to all of you guys. Much thanks again, brother. No problem. Peace and blessing. And thank you, Ashai. Thank you. Thanks much, brother. Appreciate it. Oh, no problem. Thank you, Quran. Thank you, guys. So, see you guys. Bye bye.